Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, created exclusively for NMP TV and brought to you by our friends at PRMG. They're working for your best interest. So last week, another exciting week with interest rates. We saw inflation numbers move up 7% year over year on the headline, according to CPI, and 5.5% on the core. Those are pretty big numbers. You'd have to go back 30, 40 years to see inflation numbers like that. Now, they're going to go up even more through February, March, before starting to level off. As a result, mortgage bonds typically don't like that. But here's the deal. Last week, mortgage bonds saw those numbers and digested them pretty well, helped quite a bit by some good auction results. Foreigners coming in because basically our yields here are a lot more attractive. So that leveled things out a little bit. Now this coming week, we do have a lot of housing data to go over. And of course, there's a lot of fears about housing. Is there a bubble? We're going to get existing home sales, which will tell you about the pace of housing. Remember, we've got 13% less inventory. Interest rates are now 5/8 above where they were a year ago. And of course, home prices are up about 18% year over year. So if we get a number even reasonably close to not seeing a big drop off in existing home sales, you've got to say that's a big win for housing. There is still a lot of demand out there and inventory levels are still very tight. As far as yields go, I want to watch the 10-year Treasury. It's in a range between 170 and 176. If we get under 170, there's a lot of room for mortgage bonds to improve. One of the other factors that's out there is we're hearing a lot of talk from the Fed now. The Fed seems to be trying to outdo each other on how hawkish they could be, how they're going to guard against inflation. Now remember, Fed members just back in November, not a long time ago, 2 months ago, say, we're in a really good place here. We think that the zero interest rate policy is appropriate. This is a real 180 from where they were. Now it's shifting gears as these inflation numbers have a lot of public unrest. People are becoming very unhappy because inflation rising faster than wages, which it is, means that the misery index goes up. People start to feel the pinch. We saw retail sales for December down significantly. And when you think about that, December is supposed to be a really good month. So people clearly feeling both Omicron, but also inflation as the big issue. Now, as I said, the key level to look at on the 10-year Treasury this week to see lower rates is 170. If we get above 176 on the 10-year, there will be some follow through to the upside. So we're in that range right now. And mortgage bonds also in a wide range, so we could see some back and forth whipsawing before the 10-year guides us through which side of this, either above 176 or below 170 will be, and mortgage bonds will follow suit. Hope you guys have a great day. Talk to you next week, and get on MBS Highway. By the way, we navigated through this big drop in interest rates beautifully. We called all the peaks before it happened. If you're struggling right now and saying, oh my gosh, what do I do next because I saw pricing get worse? Why put yourself through that? Just get on MBS Highway. Talk to you soon. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.